Let's welcome in our guests, in fact, Mr. G. Chokalingam and Amar Singh join us on the show. Amar, in fact, let's get a technical check on Zensar Technologies on the charts. How is it looking to you? Ran up quite smartly yesterday, but down by about 4% in trade today.
Yeah, looking at Zensar Technologies, what we see is that from 900 levels, it's yesterday traded as high as 1070, but currently it's trading around 1000 levels. So that was a spike that we witnessed yesterday. So the high of yesterday is definitely going to be a key resistance level to watch out for. And overall, on the long-term charts also, upside seems to be capped in the region of 1070 to 1100 levels, whereas on the downside, yes, 900 level, that would be a level of support. More or less, you can say it's sideways trading for Zensar Technologies, and yesterday's spike and the high of yesterday is not likely to be breached in the short term.
All right, let me also welcome in Mr. G. Chokalingam. Mr. Chokalingam, first of all, a happy birthday to you from everyone here at BTVI. We wish you a great year ahead, good health and prosperity for you. And since it's your birthday, which are some of the stocks that you will be rewarding yourself with? What are you looking at?
Thank you very much. I am really touched by your greetings. Of course, my birthday has come when BSE market cap has hit almost 114 lakh crore lifetime high, which means it is really very difficult for me to find great ideas, but still I would try my best. I firmly believe that stocks like South Indian Bank, Savita Oil Technology, Ideas Revolution, these are some of the stocks which can definitely create a lot of wealth in 1 to 3 years time frame. The fourth stock would be KCP Sugar, which is already down by about 21% from the recent peak. It's a great sugar company, strong balance sheet. And this is another company which I firmly believe that can give 25 to 30% upside in 12 to 18 months. And these are my, strong picks in the current market environment.
Fair point, Mr. Chokalingam. As far as markets go, you saw that sharp slide come in yesterday, but we've held on to an 8500 range, and I'll get Amar's technical view on this. But as far as market direction goes, ahead of the US elections next week, and also Fed hinting at a rate hike in December, what are we likely to see?
Earlier also, whatever is the outcome in the US election, our market will not fall badly. There is a little nervousness on the eve of election. Therefore, the volatility would continue with a little downward bias. But I'm pretty confident that our market will not fall because the political alignment which involved US, Japan, India over the last 4 or 5 years give me tremendous confidence that whatever is the change in the leadership, there won't be any detrimental policy towards India. As far as the Fed rate hike is concerned, one good thing is that the Fed has given enough expectation across the world that they are going to hike the rate. So that would be accepted easily. So having said that, very interestingly, there is a dichotomy within Indian market. Sensex is down from 30,000 to less than 28,000. But if you look at the all BSE market cap, actually we are very close to lifetime high. Last August it broke the record at 109 lakh crore. Right now it's again 112, 113 lakh crore. So what I'm trying to say is that still, though the index stocks are struggling, there's a lot of robustness in the mid-cap space, and still there is some opportunity in the mid-cap space. So they may not crash. The good quality mid-cap stocks may not crash, till this end of calendar year.
The action clearly in the broader markets, and look at good quality names over there. Amar, a technical perspective on the markets, the Nifty has given up the 8500 mark at the day's lowest point right now. Not a big cut, but in terms of psychological levels, how important a support is 8500, and technically where do you see markets heading right now?
Yeah, overall, if you look at the markets have not been going anywhere over the last couple of weeks, and primarily as the US elections are nearing, so there is this investor nervousness that's taking place. Earlier, the polls were clearly in favor of Hillary in the lead, but that's not the case anymore. So we are not only seeing a sell-off in domestic markets, it's in Asian markets if you look at European and the US markets. If you look at the US markets, S&P 500 is trading below its technical crucial support of 2120. If you look at the Dow is trading above the below the 18,000 mark. So as far as Nifty is concerned, 8420 to 8450, that's a major level of support on the downside. Yes, what we are going to witness is any pullback is likely to witness a short means fresh shorts being built in the market. There could be some short covering, but overall there would be some selling pressure. We'll have to watch out for 8420 to 8450. That would be the range of support. I would say that's a crucial level of support. If that is taken out, then we are headed significantly lower towards 8300, 8320 levels.
Markets at days low as well. Amar, a technical call on the Bank Nifty as well, below 19,200 right now, off the highs of the day. We were watching out for 19,500 as a key support a couple of days back, but now the action is more likely moving towards 19,000. What's your call on the Bank Nifty?
Yeah, overall Bank Nifty, if you look at Bank Nifty per se, Bank Nifty has a support. As you rightly said, 19,200 is a level of support for that. But if that is taken out, then it's headed towards 18,900 to 19,000 levels. So there could be fresh selling pressure. And also, if you look at the overall PSU banks, there we are seeing selling pressure. It's the private sector banks, primarily ICICI and some pullback which we had witnessed in Axis to a certain extent. So that was that's supporting the markets. So if we see some sell-off happening in public sector banks, and again Bank Nifty we could see trading below the 19,200 mark. And it would also, as I said, also depend upon the crucial support level for Nifty, because that is more or less overall the sentiments that is there in the Asian markets and global. That's more or less caution. So that I think that would continue in India per se as well in the short term.
Mr. Chockalingam, entering into a key period of the earnings season towards the fag end of Q2 reporting, and this is where some of those more volatile names will come in. Watching out for PNB earnings tomorrow, ICICI and SBI next week as well. Given what we've seen from Axis Bank, should the street be concerned about these numbers?
Yeah, certainly. There is a possibility of mixed performance, because if you see so far, the results are not uniform. Some of the banks, they have seen tapering off of NPA. In some cases, the NPA keeps, growing. So that trend would continue. Unfortunately, even the bank credit, which almost actually double-digit in the recent fortnights, now again has slipped down to just 9% in the latest fortnight. So therefore, the stress for the banking stock would continue. However, I firmly believe that Axis Bank, it is punished much more than what it deserves. Now it is trading less than 2 times book value. In fact, in the last 2 days, even though the market was under tremendous stress, Axis Bank, has bottomed out, and there's a lot of delivery-based transactions. So I would use this opportunity to accumulate a stock like Axis Bank.
Use the current dip to accumulate Axis Bank. Mr. Chockalingam, Amar, just hold on to your thoughts. Let me also play out some comments from a market guru today, Ramesh Damani, and he is of the clear view that the bull run in Indian markets is intact and that investors should look to buy at every given opportunity. Here also on some of the sectors that he feels will do well going forward.
Over the next few years, we expect to see a big boom in consumption and services. While the traditional consumption may be very competitive, I think the broader consumption themes, for example, airlines, for example, housing, for example, entertainment, travel, I think all these will take off in a fairly substantial way. So for retail investors, it's a good time to be positioned. The broader point, of course, is that we are 3 years into this bull market, which started in 2013 when the index was 16,000 and the rupee was 70, and the Modi government was a glint of hope, but nothing more than that at that point. And the market has gone up 3 years after that. Not as much as people hoped, but it still had a very substantial recovery. So the question that I am often asked, and that we are often asked in television interviews, is because the index has gone from 16,000, say 28,000, is it over? Is it too high to get in? And the summary answer is that it's not too late to get in, because bull markets have a time and price duration that is far more substantial than what we've seen so far in the last 3 years. And it is my estimate that we're still in the early second phases of a bull market, which will take us perhaps far longer in terms of points and also in terms of time. So because the index has gone up, is it a little too late to invest? I don't think so. I don't think it's ever a bad time to invest in high quality businesses if you're getting them at an attractive price, which I think we are now.
Ramesh, what are your thoughts on IT companies? There's been a lot of talk about the fact that there are structural changes in the business. And if I separate them into the top 3 or 4, where maybe the power laws start to apply, and hundreds where the relevance may be getting lost. Nobody doubts that technology may continue, but so have railroads, but only 1 or 2 have been left. How does this IT stocks or sector play out going forward?
Well, it's a question that has concerned a lot of the finest minds on the Wall Street. The fact that there's a technological change going on in the technology industry is probably well known now. There's a lot of automation, a lot of productivity built into there. Increasingly, companies are looking to give products and solutions. So let me take it into 2 parts. The first part is what is happening to the mainline tech companies, as you suggest, and second, are there still opportunities in tech? And I'll take the second part first, because I believe that as you are well aware, software is decimating industry after industry. So there's obviously a need for a lot of software. Now to the more important question is, where do you put your money in software? I would say increasingly there's a bunch of mid-cap companies in India that aren't following the typical go to the West, ship heads, build in dollar, service contract models that has been pioneered so successfully by the biggies. They're increasingly going into very specialized areas of products, knowledge management, BPO services. And I think if you look within that sector, you'll find lots of opportunities. So maybe you want to look at companies in the cybersecurity space, maybe you want to look at companies in the knowledge space, or know how to use the Aadhaar database. Maybe you want to look at companies that are developing some sort of other products in banking, in BFSI space. So among the narrow rung of stocks, in the mid cap, I'd say under the 2,000, 3,000 crore, the number of companies that are doing these innovative things that I think will probably do well and prosper over the coming years.
Ramesh, I'm completely out of time, but I thought I'll just take your quick thoughts on the growth of non-banking financial companies specialized in housing, personal loans, and like you mentioned, maybe Aadhaar and this 1-minute checking is actually exploding a market that never existed. So your thoughts on their current valuations and where they are headed?
They have been kind of market darlings for the last few months. The stocks on IP have done well. The listed companies have probably done well. My sense is that enthusiasm is running a bit ahead of fundamentals. So I've been a bit wary of them. The sectors will do well. The fundamentals are perhaps ahead of the enthusiasm.
That's Ramesh Damani's call on the markets over there. Mr. Chokkalingam, the one key takeaway that he's mentioning, and we've discussed this with you earlier as well, we were also talking to the management of Zensar Technologies. He's talking about look at some of the mid-cap IT companies that are not doing what their larger peers are dependent upon. And the management of Zensar Tech also saying that over the next few years, they plan to become completely digital. The service revenue, the revenue stream would be from digital services entirely. And right now it's at about 30%. If there are any mid-cap IT companies that you are looking at that are headed in this direction and could in fact become value picks going forward?
Certainly. I mean, in the last 2 years, we have had a outperforming rate for the mid-cap IT stocks rather than the large IT stocks, which played out. Right now, in terms of the valuation, 2 stocks we have been continuously accumulating for our clients. One is larger than Tubro Infotech, because it is now trading in a single digit on 1 year forward earning, according to me, which is very attractive. And second is Mphasis. It's one of the best IT stocks in terms of dividend yield also, and trading at around 13 PE on current year earning itself. These are the 2 stocks we have been aggressively buying. Personally, also I hold Mphasis, and today there is a board meeting for Mphasis. Investors can wait, and if there is no negative surprise from Mphasis September results, then one should use this opportunity to accumulate aggressively. The last point I want to make on mid-sized IT companies that now large companies are struggling to grow, even in rupee term in double digit. So which means the consolidation which already started with companies like Exaver, Geometry, Polaris. This would continue now. There would be a lot more acquisitions, and that would lead to re-rating of valuation multiple for mid-sized IT companies. So therefore, these two names I am strongly recommending.
Fair point. Amar, before I get in some of your trading ideas of the day, a check on some of these big movers we are seeing in trade today, a CESC, Intellect Design and a Stride Shasoon.
Yeah, if we look at Intellect, that's down, that's significantly down, currently trading around 167, 168 levels. So that's, I would say that's more selling pressure that's witnessed, and it's taken out a key support level. Earlier it was around 160, 170 to 175. So that has been taken out. So there is selling pressure, and we could see some support around 165 levels to watch out for as far as Intellect is concerned.
What about a CESC and a Stride Shasoon? I believe you have a call on Strides as well.
Yeah, as far as Strides is concerned, we've seen it really rally after the news. So Strides is a buy at in the range of 1118 to 1120, 23. That can be bought in that range with a stop loss of 1085 and a target of 1175. So that's one stock which is on the buy list.
And your other trading ideas, the others that I see are all sell ideas for today. Which are some of them?
Yeah, actually, if you look at the overall breadth of the market and the sentiments that is there, more or less we are seeing some selling pressure coming across. So Grasim would be one, Grasim Futures. That can be, it is already sold off, but still a sell can be initiated in the range of 913 to 918 with a stop loss of 938 and a target of 875. That's one. Second is Engineers India. So that again is a sell in the futures in the range of 255 to 258 with a stop loss of 266 and a target of 240. And the third is again a sell, that is Aditya Birla Nuvo futures in the range of 1310 to 1315 with a stop loss of 1346 and a target of 1250.
Mr. Chockalingam, what's going on in the oil and gas space? You have ONGC and BPCL amongst the top losers in trade. You've seen that sustained slide in oil prices ever since it topped out at around $52, $53 per barrel to now at about $46 per barrel. Is that up move A in oil prices over, and B, what does this mean for the oil and gas space going forward?
Yeah, a very interesting question. I've been quite negative on ONGC. Oil price, within the last 1 month, Brent oil went as high as $53. Now, as you rightly mentioned, it is below $47, which is certainly negative for companies like ONGC. However, it is really very positive for HPCL, but HPCL has already played out very well in the last 1.5 years. So perhaps there is a profit booking. In fact, if HPCL corrects even another 5%, then it could become a good long-term bet. As far as oil outlook is concerned, I still believe that it's at least another anywhere from 6 months to 12 months for the world economy to improve a lot and then see robust oil outlook. So therefore, one can continue to play on the users of oil and users of oil derivatives, which already created a lot of money. Names like the TAS stocks, some of these petrochemical companies, and they would continue to post robust results at least for 2 to 3 more quarters. And one should avoid a stock like ONGC.
Avoid stocks like ONGC. I'm looking at some of the other big losers in trade right now from the mid-cap space, and Amar, if I could get a technical check on some of them. GNFC down about 17% right now, a TTK Prestige, and from the oil and gas space, a Chennai Petro.
Yeah, as far as GNFC is concerned, we've seen a real sharp crack today from almost 270 levels. It's currently trading around 222. So there has been a topping out in this stock. 290, if you look at on the technical charts, that's a level to resistance, because technically that's a key level of resistance. We've witnessed profit booking there. On the downside, 200 would be the level to watch out for support for GNFC. And As far as
Petro.
which was the other stock that you had asked?
TTK Prestige and Chennai Petro.
Yeah, looking at TTK is again, it's been extremely volatile. If you look at it today from almost 6,500, it's 5,940. So the upside seems to be capped today because it had a high of almost 6550 yesterday, and then it has corrected today very sharply. So I think it's time to either book profits if one is in profit, because it has rallied from almost 4,800 levels. So still there is a sizable profit that has been made. So there can be some profit booking done. As far as on the upside, 6,500 to 6,550, that definitely is a level of resistance. On the downside, major support for TTK Prestige is 5670. So that's a level of support. As far as Chennai Petro is concerned, yeah, as far as Chennai Petro is concerned, again we are seeing a sell-off in Chennai Petro. It's around 258 levels, and it had a gradual topping out, like unlike TTK, wherein we had a sharp up move yesterday and today there was a significant correction. So that's not what we are witnessing in Chennai Petro. And on the downside, it has some support around 240 to 245 levels. Whereas yes, the upside definitely is over for Chennai Petro in the short to medium term. That is anywhere in the region of 290 to 310 level. That's a key level of resistance. So this stock is likely to consolidate somewhere around 240 levels, 245 levels, and then maybe it could see some upside move.
Right, 2 minutes to go before we shut out trade for today. Mr. Chockalingam, if you do have a call on a TTK Prestige, of course it's reacting to earnings today. It's been a pretty flat quarter from them. Profit seeing absolutely no growth, just about a crore of growth over there. Sales though have come in healthy at 463 crores from the consumption pack. If you do track TTK Prestige?
Yeah, I used to track. I mean, I used to be bullish on the stock more than 10 years ago. It has a solid multi-bagger. You know, the problem is all these stocks have become solid multi-bagger. That is why they are not able to see this, face the stress either on a regulatory aspect like a GNFC or on business aspect like a TTK Prestige. I would sell the stock. When there is no growth, you cannot pay this kind of premium to the valuation. So I would sell even at the current price of TTK Prestige.
Valuations not justified on a TTK Prestige. That's Mr. Chockalingam's call. The stock though up about 15% on a 3-month basis, but has cracked severely in trade today, down about over 10%, almost 10%. Sorry. A minute to go before we close out trade for today. It's going to be almost 4-month closing low on the Nifty if we close at around current levels. Below that 8,500 mark in trade, a cut of about 0.4% coming in. So the selling has intensified in the last 15 to 20 minutes on the street. ONGC amongst the key pressure points on the markets today, seeing cuts of about 3.5% to almost 4%. Adani Ports also particularly weak in trade, and this has been seeing a sharp run up, down by about 4% in trade today. Grasim seeing a knock of about 3% as well. BPCL, and we were just talking to Mr. Chockalingam about these stocks, also in negative territory. You're also looking at some of the other big losers that include the likes of a Wipro, an Aurobindo Pharma, add to that a Lupin, Tata Steel, SBI, NTPC, Bank of Baroda, Sun Pharma, Eicher, Tata Motors, Mahindra & Mahindra, Bosch, HCL Tech, all of them in extremely weak territory. RIL seeing cuts also, although a bit muted as compared to the moves that we've seen in some of the bigger names out there. SBI too on the back foot, but there have been a handful of names that have held out in trade today. Notable amongst that, Hindalco continues to shine from the metals pack, up by about 4%. Bharti Infratel, there was a brokerage upgrade coming in on this counter. ITC, since news broke that it's possible the tax, the GST on tobacco products could be at 40%, and markets are taking positively on that stock. ACC up in trade, even though Ambuja has disappointed and did fall by about 1.5%, but did make a recovery to close almost flat. Hero Moto down by about up by about 1.3%. BHEL, GAIL, TCS, Kotak Mahindra, and HDFC Bank holding out. In fact, IndusInd, HDFC Bank, Kotak and Canara 4 banks that held out on the bank nifty, seeing cuts of about 50 odd points, down by about 0.3%, and below that 19,200 level. So we'll have to see where bank nifty is headed next. Yes Bank, Axis Bank, Bank of India, ICICI, Bank of Baroda and SBI, all of them seeing cuts in trade today. And of course we're watching out for those PNB earnings tomorrow, so that will be a key monitorable over there. But on the whole, the mid-cap space seeing broader cuts. The Nifty mid-cap down by about 1.5%, BSE small-cap down by about 1% in trade. Some broader cuts coming in the larger markets over there. But as far as benchmarks are concerned, another weak session on the large sheet. Nearly 4-month closing low on the Nifty, below that 8,500 support. We'll have to wait and see how this series develops, especially in light of some of the global cues that are out there. Amar, if we can just revisit a chart check on the Nifty, have given up 8,500 for now. Tomorrow, last trading session of the day before we get into the US presidential elections that we're watching out for Tuesday and Wednesday. If you could just leave us with some levels to watch out for.
Yeah, immediate levels for Nifty to watch out for technically is somewhere in the region of 84.20 to 84.50. It's currently around 84.85. So that is a level to watch out for. We could see some short covering in the market. However, the overall trend definitely remains bearish. So what we are going to witness is any pullback is going to meet with resistance on the sell side. And I would say till the time there is not clarity on the US elections, I think that's going to be the sentiments across the globe, so which we are also getting impacted by. So these are the levels to watch out for in the short term.
Caution likely to prevail as the global cues take center stage. Mr. Chokkalingam, Hindalco top gainer on the street today. It's been a good summer 2072 for the metals pack as a whole. Are they likely to continue shining bright going forward from here as well?
No, certainly not. From the bottom, most of the stocks, if you take Hindustan Zinc, it has run up 100% from the bottom. If you take a Vedanta from the bottom, it is more than 3 times. So they are all, reaching a fair valuation. Not much upside at all. Let us not forget, in case the global deflationary fear once again increases because the oil price is crashing, then these metal space can have severe pressure. So therefore, I would caution on metal stocks. Of course, some of the resource stocks are still bullish. Like we are holding a huge chunk of oil, and we continue to buy Coal India. So these are the 2 names which give us a lot of confidence in terms of the valuation. Otherwise, we would advise caution on the major metal companies.
Caution on the metal pack, caution on the markets as well. Mr. Chokkalingam, Amar, thank you for speaking to us on this edition of the trading day. We'll leave it there with news that it's been another weekday on the large street. 0.4% of cuts coming in on the benchmarks, below 8,500 on the Nifty. Last day of the trading week. Tomorrow we'll have to wait and watch how that pans out. But for now, it's goodbye from all of us on the trading day team.